All right, today we're tackling a big one, CarMax. You know him? The used car giant that basically invented the no haggle way of buying a car? We're going to break down the investment case right here, right now. So that brings us to the big question, the one we're all here for. Is America's biggest used car dealer actually a smart buy today? After all those years on top, is KMX a stock you want in your portfolio right now? And really, here's the core of the whole debate. You've got this incredible, trusted brand. I mean, everyone knows CarMax, but at the same time, they're facing some serious headwinds. We're talking fierce competition, a shaky economy, you name it. It's that classic push and pull, and that's exactly what we're going to dig into. All right, so first up, let's talk about the good stuff. What's the bull case? What is the CarMax advantage? Well, for starters, it really comes down to just pure, massive scale. I mean, look at this. We're talking over 240 stores nationwide. This isn't some digital-only startup. This is a real, physical, nationwide machine for buying and selling cars. And that massive footprint, it translates directly into market power. Think about it. They own about 10% of the entire U.S. used car market. Now, 10% might not sound huge, but in an industry that is so fragmented with thousands of little dealerships, that is an absolutely dominant position. It makes them the undisputed king of the hill. So, you take all these pieces together, and what you get is a really powerful competitive moat. It's not just one thing. It's that massive scale we just talked about, plus the brand trust they've earned over decades with that no-haggle price. Then you layer on their own financing arm, SAF, which is a huge deal because it keeps customers locked into their system. And finally, you've got this massive data advantage, which got a huge boost when they bought Edmunds back in 2021. It means they can price cars with incredible precision. Okay, but that's just one side of the coin. It's definitely not all smooth sailing for CarMax. Now let's talk about the headwinds and hurdles they're up against. And you can see that pressure pretty clearly in their recent numbers. Look at this chart. After that insane revenue spike in fiscal 22, when everyone was scrambling for a car during the pandemic, you see this noticeable drop in 23. Now, everybody kind of saw this coming, right? A return to normal. But that doesn't mean it doesn't hurt the bottom line. And yeah, revenue dipping is one thing, but wow, look at the hit to their profit. Net income took a nosedive, dropping almost 60% year over year. I mean, that is a massive, massive drop. You've got higher interest rates, demand is cooling off, and this is the result, a huge dent in their profitability. Okay, so here's where things get really interesting. Despite those pretty rough numbers we just saw, the stock itself has a premium price tag. Just look at this comparison. We're using a common valuation metric here, EV to EBITDA. CarMax is trading at a multiple of around 46. Its peers, they're way down here around 7. What that tells you is that the market is expecting a huge comeback. It's pricing in a ton of future growth, which, is a really high bar to clear. So, with that whole picture in mind, strong company, tough environment, how is the leadership team handling it all? Let's take a look at management's playbook. You can really break down CarMax's history into 3 main chapters, each with its own CEO. First, you had Austin Ligon, the pioneer who came up with the whole no-haggle concept that changed everything. Then came Tom Folliard, who was the empire builder. He just went on an aggressive expansion spree across the country. And now you've got Bill Nash, who's in the driver's seat today, trying to manage this shift to an omni-channel world where online and in-store have to work together seamlessly. And this scorecard here really tells the story of the current leadership. Look at this. Operational execution gets a strong rating. These guys know how to run the day-to-day business like a well-oiled machine. But then you look at strategic vision and adaptability, and they're just fair. It kind of paints a picture of a team that's great at optimizing the current model, but maybe a little less focused on bold, game-changing moves for the future. Okay, so we've covered the good, the bad, and the leadership. Let's bring it all home and get to the final verdict. So when you boil it all down, it really comes down to this. First, you have the strength. CarMax is, without a doubt, a market leader. Great brand, great business model. Can't argue with that. Second, you have the risk. This is a cyclical business, and right now the cycle is working against them. Plus, that stock valuation is just really high. So that brings us to the verdict. It's a fantastic company, a really solid franchise. But for now, until the economy improves and that valuation comes back to earth a bit, it's probably best to be cautious. And I'll leave you with this final question to think about. CarMax built its entire empire on being predictable, reliable, and safe, a steady hand. But in today's auto market, with everything shifting so fast, new tech, new competitors, you have to wonder, is steady and safe really enough to win the future?